Hello everyone, this is Carlos from ForesightFX.com. Today is April 22nd of 2010. Let's get into today's forecast review. Okay, so yesterday we were going along the market on any opportunity that we see available, either by entering into the synergy zone or with the pivot step system. Yesterday, as I stated, the pivot step actually was the one who um, gave us the opportunity to actually fulfill what we were looking for. In this case, I have here a pivot step high right there, and I got another one right in there. And basically speaking, the market came on around this area right here. It's just when the entry opportunity came about. Let me just give you an example of what I'm talking about. This would be the pivot step. The market actually from this pivot tried to come down. Obviously, it was pretty far away from, well, 18 pips away from the zone, and the market did not enter anymore. The market immediately started to reverse. No entry was triggered whatsoever until the break of that resistance point. In this case, I'm going to try to recreate this trade for you guys. Now, if you notice right there, there is a high close at 54.31. That's absolutely above the trend line of 54.25. 31 being above, that's a confirmation of the possible upward move. That could have been our entry right there. All right, and our stop should have been around 10 pips below the 29 over here pips. It would have been about 39 pips of stop, not much of a risk. Potential of this trade was actually this first and second target, and in this case, to make a long story short, the market immediately reached the first target of 54.49 right there, went through it, and once again, take a look how the market actually stopped at that 54.49. Um, I'm sorry, about on that 54.49 target and 54.71 target, which is our third target for the day. So the 54.22 was right around this area where the market actually broke above. So no trigger, although the market reached that first target, it was part of the movement and not the actual trade itself. So we would have went long around that price. Now the second target became our first target, which is the 54.49 nicely, and once again the 54.71 it's the one that I just plotted on the target pricing. Take a look how the market just hovered right there in it for around 1 hour. It's actually two 30-minute bars, giving a lot of opportunity to capitalize on it. So in this trade, around let's see over here, 54.27. 28, let's say 31 right there, you would have gained about only 17 pips and roughly 40 pips or 39 pips on the second target. Pretty enough for the original intended 20 to 40 pips that we were looking for. By this time, here's how you implement this situation. Second target was reached. Immediately, what we do, target was around this area, we cancel this target and we move it to the break-even point or the price that we were going for. When the market reached or surpassed the first target, what we can do is we certainly can cancel this one and immediately wait for the market to reach the second target and move our second, the stop loss to the original target price. If the market come back like it did in here, it's gonna take us out. So in either case, the second target or the third target, that in this case they turn into the first and second, we would have collect perhaps half of our position in the first target and the remaining on the last target right here. From that point on, we should expect a reversal. The market actually did reverse and came on into the synergy zone for the first time. Now, we played this synergy zone? Absolutely not. Although it is the first time that the market reached the synergy zone, for my case, is not valid due to the fact that the overall plan and objectives were fulfilled. There's no point for me to actually take this trade. Although the market sustained inside the zone and try to go up, if you noticed, the objective of the plan based on the prior day was already fulfilled. That it was reaching these targets right here of let me just place the 40 20 second. There you go. These were the fulfillment after the market just came from this retracement over here that we were expecting, although it did not reach the synergy zone. First target was 22, reached. Second, 44.49, reached. 40, 54.71, 54.71, reached by the tick once again. Market did what it gave us the opportunity as we predicted, and the market just came back and reversed. So that's about it for this for this trade. Now, people ask me, should the prices just came back for the first time into the zone? Yes, absolutely. You're gonna see some support right there, and the market's probably gonna give you a couple of opportunities or to capitalize with a couple of pips perhaps. In this case, about 52 pips, 49. So it's always good to take the first trade inside the zone. All I'm saying is the targets are not going to be reached because they were already reached before. That's the whole point. But usually the first visit towards the synergy zone is a good place to go long the market. Just bear in mind that since the targets are already been reached, you're not the probabilities of the prices hitting again those targets are very null. Okay, that just my cup of tea over there. So just so you know. Now, if I'm gonna expand something later on here, people asking me, so Carlos, how can we assess this situation? If you notice, this is where the pivot step system comes in place. You notice we got 2 pivots, even 3 pivots here. You can actually draw a trend line based on support. So we got 2. I usually draw 2 if I decided to go ahead and place a trade. I'm just watching the market by this time, and it's the US session, and I want to see the reaction point. So if you see in this case the market just collapsed, breaking completely these 2 support lines. So once again, the support lines turns into resistance. A possible retracement back to those levels are very probable. So a sell opportunity back to those levels, it's absolutely high, and this is exactly what we're looking for. Look how those 2 trend lines are actually devoted inside today's synergy zone that I just calculated. So these 2 confirm a very highly probable area or prices that if if market behavior start going into the zone, they should not go any further than this resistance line, and if they do, they probably won't go as high as this resistance line, giving us an opportunity to either come back from that level or from this level, or perhaps even from a lower point of view and not even reach those levels. So a very highly probable turnaround point to the south or sell side, it's very highly. So this is exactly something that I needed to add to you so you can understand how to use the trend lines as your actually areas that you can see without any indicator whatsoever, highly probable areas that you want to go short the market. It is obvious. Let me just mark the synergy zone here for a while because I want to do something, and I just want to show you that I want to teach you how to become a great trader with all this. Now, we already know that this is let me just eliminate this and try to find here where is that level. Hold on, there you go. There you go. All right, so let me just take this out of the way for just a while, and I want you to see something here. Let's say that I don't know how to calculate the synergy zone, of course, because that's my proprietary system, whatever. So how can you become very good at predicting those areas as well by just watching and using trend lines? So I'm giving away mostly, most of the pivot step system here, so to speak. The techniques that I've used is a little bit more advanced, but the whole point here is now I do have pivot steps in a kind of a reverse mode, meaning that I used yesterday's past analysis, or so to speak, uh, last session. Let's just say last session's price activity. I try to identify important levels of market flow analysis, and I found these two or three levels of uh, support lines that turns automatically as resistance points. Now, it's very common to see price breaking through some support lines and come back and test those support as resistance and come back down again. That happens over and over and over again. It doesn't happen religiously or perfect, but it's just something that happens. I'm gonna try to see if I can find something here that maybe we can relate to it as a possibility. I don't see anything right now, but perhaps if I drop down to, let's see, 15 minute, I can probably find something. All right, let's see over here. Do you see this small? Let me just mark this in here. That small bottom there, that small bottom there. This is a 15-minute chart. I'm trying to hone in an entry point, right? So maybe even the 5 minute we're gonna see more clearly. In this case, let's say that I do have that trend line. That trend line is absolutely perfect right there. Look, 1, 2, and this one came, bounce from it, and eventually here is the breakout. So let's say that I don't want to go low, or I miss the entry point on the breakout. So another point of view for you to understand is that you can actually perhaps wait for the market to do some kind of retracement, test what? That support that turns into resistance now, and perhaps go low or short the market right as a rejection point of that. And in this case, you can see that the market just collapsed. So in this case, the market came back down. All right, I'm gonna draw that for you. There you goes. Came back down, test, and this would be your great opportunity to go short the market, and the market retraced and came back down. So here's a clear scenario where you see some support line turn into resistance point and eventually go down. So having said that, and having shown you those opportunities, this is exactly what we see here, but a little bit in a more higher time frames. The market just collapsed, so we were expecting the market to perhaps go test those support as resistance, perhaps hover, have a little hard time on it, and eventually come back down. All right, so you can use these on any stocks or futures, commodities or anything, because this is how I actually came to use. I swing trade the markets on commodities and futures using this type of trading analysis. I use mainly my pivot step system. My forecast in it, it's a little bit, it's very reliable, it's highly accurate, but I don't like waiting for days for everything to happen. So it's not like as the liquidity is not as high as the Forex market. That's the reason I love the Forex market. So anyhow, I just wanted to point that to you. So now we have today's sorry for that, let me just move that in here. There you go. And we got today's sell opportunity between 53.67 and 54.13 with a maximum risk of around 45 or 46 pips. Not bad. Now we do have visual confirmations based on the previous past data that we got two highly reversal resistance points in there. So any intended move towards this area, those are the levels that you would like to go short, and they actually fall inside the synergy zone. So we got synergy zone. Now let me just walk you through the process once again. 4 hour. What does the 4 hours doing? We see it. They just cross clearly, so they're intended to go down. So there you go. Can you see it? Here's a clear scenario. All right, yeah, we will want to go short, definitely. Price action. What is price action doing? Well, we know price action is definitely going down. They have moved from the top of the zone to around the bottom is 153 pips movement. not much of a range for the usual over 180 and 200 that the market usually does. And we got the 4 hour. This is definitely a downtrend. Let me just double check this with the market flow analysis. So what is the market flow analysis? Once again, let me just mark something visual for you. Okay, I'm marking my typical swings. Got it? Just visual stuff here. Okay, guys, try to follow through. If you noticed, this one here, it's a very important level. This one here was a very important level. And those are, so to speak, the swings, the most recent important swing lows, all right, that are important for me to understand that they should sustain as support. Here is a violation of this, so meaning that the market is intended to reverse. If you notice, that was inside the synergy zone, and that is actually the reason also that I don't want to take this trade to the upside. They violated one of the most recent important pivot points, or pivot lows, or swing lows, whatever you want to call them. And on top of that, the market is coming off our 3 target prices. So this prophecy was already fulfilled, so it's not going to repeat itself. So definitely they took below, so their tendency is to go down. If that's the case, we understand that. And once again, you see this pivot low right here. All right, I just wanted to show it to you. I'm giving you all my ideas and knowledge in this video right now. I got that one and I got that one. So I got this one as well. All right, so this is one of the most important parts. So what I can certainly do is identify this over here, and this is another one. The market is just a little erratic though, but you know, we can use any one of those. They all will fall within the same area. Just do one more, this one right here. And if you notice, we got 3 levels right here of a highly probable resistant area that the market is not going to hold. And look what happened. The market violated that point, these 3 levels, 1, 2. Now this one has not been violated until later on today, but these 2 were violated, and what do you guess? Support turned into resistance, and the market collapsed up from it. So it's definitely an intended reversal point to go to the south. So I got all this information right now, right there in place for me to identify a possible reversal to the downside, and the 4 hour confirms that today. So we're looking to go short the market between 53.67 and 54.13. I just calculated target prices, which I think I got right here. Okay, so possible targets to the south after the market visiting back to the zone is 53.16, 52.65, and 52.30, giving a potential, assuming the beginning of the zone, of 50, 99, and 130 something like the usual. Now you can see that the British pound usually brings over 120, 140 pips of whole movement. You've seen it over and over again, and the third target will always dictate that to you. Now the other thing that you can understand, let me just go back. Sorry that I'm trying to give a lot of information today. I'm a little bit on the mood for it. If you gotta, I hope you understand what the ADR means. I'm gonna show you what ADR means as well. I think this should not be the video for this, but anyhow, ADR will be you can measure from session to session the top to bottom 151, and that's the average daily range 151. So we expect from bottom to high or high to bottom a move of around 150. Let's see what happened in this day. 140 something, pretty close to it. So it means that the next day should move between 140 and 150. Let's see that what that means. The bottom to the high, 110. Not much of a, so it means that today, in this case, the market should move between 140 and 110. Let's see what the market did. We already did this. It's 131. No, here's the bottom. 154. So there you go. You roughly got an idea of what the market should move the next session based on the previous session average daily range. So it means that if the market move 150 something, the possibilities of the market move 150 something would be very high in this level. If that is the case, I will have a rough guess. Let's say that the market just reached inside the zone, and I'll use like the top of the zone as the worst case scenario. All right, meaning that the market came up, almost took the sell, and then reversed back up. If that is the case, I want to know where 150 points would be. In this case, 144, 150 would be pretty close to the third target prices. So it's a very, I mean, to the second target price. So that means that this second target price is extremely highly probable to be reached today. I don't care if I short from here or from the second target. I know that if they move, if I let me just move, let me just take maybe here from right on the resistance point, 150 would be right there, third target. Check it out, incredible. I'm doing these slides for you guys. This is the way that I do this every single day. I plan everything by the tick. So now I know that based on the ADR of the prior days, average daily range, I know that it's probably going to move between 140 and 150. Now I know the area of highly probable turnaround points, because this is what I'm giving you. This is what you're paying for as well, right? So I'm gonna guess if they go all the way to the top, 150 will be pretty close to the second target price. So this guy, 52.65, will be a very highly probable target if the market actually collapses and start going to the south. So I know that today the probable trade, if I short inside close to the zone to the first target, is I will probably make 100 pips, out of which I'm interested of getting what, about 20, 40, 60, or maybe 70 pips out of all the move. All right, so I hope this has been very enlightening to you. I enjoy very much doing this video today, and I'll see you on the next forecast. This is Carlos Diaz from Forex FX reporting live, and it's actually April 22nd of 2010, and it's 10:42. Thank you. I'll see you on the next forecast.